morning, traders. Welcome to today's Outlier Live, where we cover the biggest news stories of the day and what the AI trading data says about it. Our first story of the day is Bud Light has just figured out how much it costs to go woke and go broke, and they are never, ever going to financially recover from this. Our second story of the day is I hope you like paying more for Happy Meals, because McDonald's and Chipotle are raising prices, and you're probably going to pay $20 for each of those Happy Meals. And I don't know who's going to afford that. And nobody's going to be able to afford anything if the Fed has it their way. They are literally trying to make you go broke. If this doesn't make you angry, I don't know what will. Tune in to that and everything else and all this more on today's Outlier Live. Bud Light will never financially recover from their attempt to go woke and go broke. I don't know if you remember, but a couple months ago they partnered with a influencer called Dylan Mulvaney. And Dylan Mulvaney has very strong opinions in what Dylan Mulvaney does. And this person decided that they were going to have a 365 Days of Girlhood campaign. And Bud Light sent this person a can with this person's face on it saying, hey, we're helping you celebrate 365 days of girlhood. And then, to add insult to injury, their chief marketing officer, I believe that was her title at the time, came out and called their entire customer base fratty and out of touch. And they wanted to reach a new customer, a new segment, a new generation. But the problem with that is they forgot one key thing. You don't want to turn away the customers who are literally buying your product already. Rule number one in business is don't scare away your existing customers, because they are so hard to get to buy in the first place. And once you've got them as a customer, you can basically keep them for life until you offend them. And that's exactly what Bud Light did. Hey, if you're just tuning in, my name is Christopher Yule, and we cover the biggest headlines of the day and what the AI trading data says about it. So if you're interested in that too, be sure to hit the subscribe button down below and start trading with AI today. Go to OVTLYR.com to see why outliers win. So let's go see what the article says here, right? Anheuser-Busch reported earnings on Tuesday, and they reported a staggering 13.5% decline in revenue in the third quarter. In the third quarter, we've been dealing with this for months at this point, and they're still getting rocked by this. The company's Bud Light brand continues to suffer after their partnership with Dylan Mulvaney. Sales of Bud Light began to tumble in April, right? We're in November now. We're talking 7 months from this. They're still getting the floor wiped with them, right? The global brewing company conglomerate also reported a 17% decline in North American sales volume in the third quarter. So they're down on revenue and they're down on volume. That means nobody's buying it. Nobody's buying it. North American sales fell 14.5% in the prior quarter. They have shot themselves in the foot so bad. Nobody wants their product, right? Think of it this way. When Nike comes out with their new shoe, Nike puts their shoe on the best athletes in the world, right? It's like, hey, if you wear this shoe, you can turn into LeBron James. You can turn into Michael Jordan. When any company comes out with a product, they want to associate that with the highest level status of that product. Bud Light associated that with Dylan Mulvaney. That's the correlation here. Nike's choosing LeBron James to sell its shoes. Bud Light's choosing Dylan Mulvaney to sell its beers. And so to the consumer, they look at this and they're like, I'm not interested in turning into Dylan Mulvaney. I would love to turn into LeBron, be able to dunk, be 6'12" or 6'8" or whatever he is, right? Jacked, best player in the NBA. I would love that. That'd be awesome. So if I buy these Nikes, then I can definitely be like him one day. Translate that into what what happened with Bud Light. It's, hey, if you drink this beer, you're gonna turn into Dylan Mulvaney one day. That's what happened. And yeah, that's exactly why Bud Light is getting trounced, right? But Dana White, CEO of the UFE, listen, Dana White's a businessman. He's looking at this like, I can still make some money on them, and they're going to pay me really good to just have their logos out there? Okay, I'll go for that, right? And listen, as a businessman myself, I might have done the same thing, right? Bud Light will still be involved in the UFC, having a heavy presence in its broadcast in 2024. It's the largest sponsorship deal in UFC history. This is a smart guy, okay? Bud Light, really stupid. Dana White, super smart. Why, right? But Dana White's looking at this like an opportunity, like Bud Light just shot themselves in the foot. They are so screwed. They have to spend ungodly amounts of money just to claw back to where they were. I'm open to taking their money. By all means, if you want to pay me, if you want to pay the UFC for the biggest sponsorship deal in UFC history, bring it on. I'll take it all day, every day. So let's go take a look at what the AI trading data says about Anheuser-Busch InBev. Bud, in fact, I think that this deal with the UFC actually might have helped with this buy point here, because we just got a buy point on the Bud stock about 4 days ago. So if you're interested in this too, in fact, this actually has a 21.37% signal return, even despite the fact that Bud Light has gone woke and gone broke and their stock price has suffered from it, right? So if you're interested in this too, be sure to head to OVTLYR.com to start trading with AI today and see why outliers win. Now let's go see what the internet says about it, right? Bud Light backlash. Anheuser-Busch said Tuesday revenue growth in most of its global regions was offset by a drop in North American sales as a sign of continuing fallout with the influencer in question, right? Let's go see what people's comments are saying about this. A lot of ads here. They never apologized for their fratty slur. To this day, they never apologized, and they were disassociating with one of their core customer groups. They've never apologized. This person's really upset about apologizing, and acknowledged that they meant it as a slur. Ooh, tough words there. I don't think it was so much a campaign with Dylan. I think the fallout came from the statements made by the marketing person, trashing the customer base that really escalated the situation. It was a 1-2 punch, right? First it was Dylan, and then the marketing chief coming out and saying, we don't want our customers anymore. We want people like Dylan. Well, of course. We're going to go drink something else now, because Coors Light tastes right about the same as Bud Light, and I'm not really worried that Bud Light, or I should say, I'm not really worried that Coors Light might change me, if you catch my drift there. Bud Light should be done with after this stunt. Continue the boycott. There's plenty of other great beers out there. Absolutely. I hope you're ready to pay $20 for a Happy Meal here, because McDonald's and Chipotle are both raising prices after California Governor Newsom approves a $20 minimum fast food wage. Now listen, I can definitely say that there should be a much better living wage than the $6.25 or whatever it is for minimum wage. That's really bad. Honestly, that's really bad. $20? Maybe in California, because the cost of living in California is out of control. We all know that. But listen, I don't want that to trickle down into everybody else's household. Because think of it this way. The only way that McDonald's and Chipotle and these other companies are going to sustain higher labor costs, I'm looking at you, UAW members, the only way they're going to sustain these higher labor costs is if they increase the price of the goods that they sell. What do you expect? They're going from paying $6 an hour, maybe $7 an hour, maybe even $10 an hour. And now they got to pay at least $20 an hour? Do you know how many more Happy Meals they have to move during that time? Well, they can offset that increase in labor and labor costs by just increasing the price. So if you are content with feeding your family McDonald's, I haven't eaten McDonald's in years, but if you're content with feeding your family from McDonald's, your $5 for the Happy Meal, which probably was $3 not that long ago, is going to be looking a lot more expensive. And then consider this. They're going to be losing customers because the price is going up. So the demand is going to go down. So that means you're probably going to have to hack the price even more in order to offset these labor costs even more. McDonald's is in a vicious cycle. A lot of companies out there are also in a vicious cycle because they have to pay their employees more because of mandates like this. But they're going to be losing customers because they have to charge more for the things that they sell. McDonald's, Big Macs, and Chipotle's burritos are about to get more expensive as they're going to have to raise menu prices in California to pay for Governor Newsom's recently signed law. The CEO of McDonald's says the law is going to have a wage impact for California franchisees, and he hinted at menu price hikes are certain to come. Certainly, this is going to be some of the element that does need to be worked on, and it's definitely going to contribute to higher pricing. There's also going to be good things coming out of this, is what he's trying to say. But we definitely know that this is going to hurt the business overall. Let's see here. The surging prices come as he signed into law a minimum wage hike with at least 60 locations nationwide. The law increases minimum wage to $20 an hour, and it's effective on April 1st of 2024. So, hey, if you're just tuning in, my name is Christopher Yule, and we cover the biggest headlines of the day and what the AI trading data says about them. And if you're interested in that too, be sure to definitely hit the subscribe button down below. And start trading with AI today. Go to OVTLYR.com to see why outliers win. So let's see, what else does the article say here? Inflation has grown to 3.7%. The general food index is 2.4% higher. Nobody's responding for comment. Basically, what they're saying here is that, yeah, we are trying to virtue signal. We are trying to make sure that these fast food workers are appropriately paid, and I get that. I appreciate that. But we're all having to fight through this inflation. And things like this, raising the price of your labor, raising the price of your goods, is the opposite of what we need right now. We just covered a story a couple weeks ago where we talked about the money supply and how we're actually seeing a stat that has never been seen before. The money supply is what is actually in your accounts. And as the money supply is dwindling because inflation's rising, listen, inflation is still rising. Even though the government wants to tell you that inflation's under control, it's not. It's not, right? When it was 10% a year ago, and now it's 3% or 5% today, that doesn't mean inflation's coming down. You are now compounding. You had 10% a year ago, and now you're adding in another 3 to 5% on top of that. Inflation is not coming down. But you know what is coming down are the balances in everybody's account. Everybody's feeling this. And now you're going to have to pay more for even Happy Meals, right? But the stat that I'm talking about here is that the money supply, everything in your accounts is going down. This is proven fact. We can see it out there in the stats. But what's not coming down is the price of the goods. And that's why I've been saying for a long time, I think we're going to see a rubber band effect, right? People are getting stretched and stretched and stretched. And at some point, they're going to cut the cord. They're going to pull back. They're going to say, I can't afford this anymore. We're never going to McDonald's again. I'm not going to be able to afford $60 worth of McDonald's for 3 Happy Meals, little Timmy. I'm sorry. We just can't do it. I'm gonna be making food at home. It's still going to cost me $47 to make the food at home tonight. But in this economy, every bit is going to help. So, yeah, the consumer right now is hurting. And raising prices like this at McDonald's, it's hurting the poorest of the people out there. And it really is a sad, sad story. Let's take a look at what the AI trading data says about McDonald's. It actually got a sell signal back on October 24th. And it makes total sense as to why it'd have a sell signal. Because when you're raising prices, you're going to have less customers. It's just a fact. And McDonald's is about to be in a world of hurt. Because Governor Newsom is making sure that they have to raise prices. Which essentially means he's making sure that the company is going to have to start losing money. Because they're not going to be able to make up for the number of customers that are leaving with the prices that they're going to be raising. So if you are interested in getting these signals, and in fact, this signal has generated a 76% return. It's pretty outstanding. If you want to get these signals and be one of the first people to get this AI trading data, go to OVTLYR.com to see why outliers win. Now let's go see what the internet's saying about this, right? They will be losing more customers, and nobody is going to pay $20 for a Happy Meal. Wait, raising wages? Raise prices of goods and services? No way. Yeah, dude, everybody is saying that, right? Bidenomics right there. Exactly. Inflation ain't it fun. Bidenomics keeps printing more money, Get ready for $20 burritos. It wasn't worth the cost of it before, and now even more so. It's not worth it. The feds are trying to make you go broke. Man, this story really grinds my gears because it is extremely, extremely true. The Fed is legitimately trying to make you go... I'm trying to avoid these ads here as well. The Fed is legitimately trying to make you go broke. It sucks, but it is the truth, and that's exactly what they're trying to do by raising rates. Now, what do I mean by this, right? By raising rates, they're making everything more expensive. And if you look around, everything's already more expensive. But in order for inflation to come back down, prices have to come back down. So if you're looking at the home value in real estate market, right? Home values have gone up tremendously since COVID. Let's say home values have doubled. Now, interest has some places tripled. So people who could afford a $200,000 home, they can't afford a $400,000 home. And in fact, if you throw into that the fact that now interest has gone up triple, they definitely can't afford a home. I was talking to somebody last night. I was telling them as we were walking the neighborhood for Halloween, I said, I couldn't even move into the house that I own today. I could not. The mortgage today on my house would be like $8,000 a month. I don't know how anybody could afford an $8,000 a month mortgage. And the way that raising rates works is that now I can't sell to people because there's so few people who can afford an $8,000 a month mortgage that I have to lower my price. So when I lower my price, let's say it went from $400,000 to $300,000. Now more people can afford it. I can't change the interest rates. I can only change the price of my house. So that is what we've been waiting on, right? We've been seeing interest rates going up and up and up, but we haven't seen prices start coming down and down and down. And once we finally see prices start coming down, that's when things are going to get back to normal. But at what time is that going to happen? How much is that going to hurt when it does happen, right? Because it's not going to come down for free. Prices aren't going to come down for free. Think of it this way, right? If the chicken plant was manufacturing chicken for $3 a pound in 2019, and in 2023 it's now $8 a pound, they've built their entire structure at $8 a pound. Now let's say it goes and they're only able to sell for $6 and then $5 and then maybe $3.50 a pound. They can't afford to pay their employees anymore. So they're going to have to start laying off employees. And the fact that they're trying to raise minimum wage everywhere out there, the fact that UAW workers are a perfect example of this, workers are striking for higher wages, the company literally doesn't make enough income to pay for those higher wages once the prices start coming back down. And that is going to lead to higher unemployment, which is what the Fed ultimately wants. The Fed's fight against inflation is weighing on middle-class Americans. They're growing more and more worried about high interest rates. This is a huge cycle here, right? We've had low interest rates for so long that we all got used to it. Now, as rates are higher, there's going to come a reckoning. I don't want to see that happen. But companies are going to start doing that once they have to lower their prices to catch consumers, to be able to sell to consumers. Once they start lowering their prices, it's going to result in higher inflation. Or, I'm sorry, not higher inflation, higher unemployment. Because they can't pay their employees what they were. So we've got some huge problems out there. The Fed is literally trying to make you broke. Americans are more worried than ever, more worried about the state of the U.S. economy than they were a year ago, despite the resilient job market, slowing inflation, and unexpected surge in growth during the third quarter. The spike in pessimism largely stems from fears about the Federal Reserve's aggressive interest rate hike campaign. It's pushed borrowing costs higher to the highest level since 2001. 57% of middle-class Americans think higher interest rates are having a negative impact on their household finances. 44% said they were stressed about the economy. And that's up from 40% from a year ago and 39% since March. The Fed's meeting again this week, and it's unlikely that they're going to raise rates again, at least right now. They are going to meet 2 more times this year, and there's always a chance that they're going to raise rates even more. Let's see here. Hiking interest rates tends to create higher rates on consumers and business loans, which slows the economy by forcing employers to cut back on spending. Where does the spending get cut back? The biggest expense on every single company is labor, period. Absolutely, no matter what. Hey, my name is Christopher Yule, and if you're just tuning in, we cover the biggest headlines of the day and what the AI trading data says about it. So if you're interested in that too, be sure to definitely hit the subscribe button down below. And start trading with AI today. Head to OVTLYR.com to see why outliers win. Speaking of outliers winning, Nick is winning today with his gorillas. Thanks for coming, Nick. And let's see here. The Fed funds rate is not currently what consumers pay, but it does affect the borrowing costs for everybody out there. It's just a fact. It goes for home equity loans, auto loans, and credit cards. Higher rates have helped push the average 30-year mortgage above 8% for the first time in years. Americans who carry a balance from one month to the next and the steady increase in rates over the last 18 months could be costing them hundreds or potentially thousands of dollars each month. The credit card balances are at the highest level ever. And there are people who support Bidenomics who are trying to tell you that that's a good thing. They're trying to say the consumers are happy. They are excited to go out and spend money. You and I, we both know that that's not true. They're hitting highest balances ever because everything costs so much more, because inflation's out of control. And they're just trying to live month to month. What is it going to take? Let me know in the comments what you think. What is it going to take to get to the point where we're back to normal? I mean, the very worst example of inflation I ever have seen in my own life was when I went to Walmart to get milk and cereal. I bought 2 jugs of Fairlife milk and a bag of Fruit Loop cereal. $17. Milk and cereal, $17. I remember when my wife and I first got married, we would go to the grocery store and buy ourselves groceries for the week, and it was $35 for she and I for a week. Now it's $17 just for milk and cereal. You can't tell me that things aren't broken right now. Beyond broken. But let's take a look at what the AI trading data says about the S&P 500. We actually got a buy signal on October 17th. So now might be the time, if you're interested in going long the market, to check it out and see if there is something out there for you today. And in fact, these signal returns have generated a 91.22% return. So if you're interested in getting your hands on these AI trading signals and being one of the first people out there with this data, head to OVTLYR.com to see why outliers win. Now let's take a look and see what the internet says about this, right? Credit card delinquencies are now rising at their fastest pace since 1991. Of course, there's tons of delinquencies out there because people can't pay everything anymore. To put this in perspective, even at the peak of 2008, the rate in delinquencies did not hit 50%. And since 2022, they're up now 60%, right? We're at the highest level since 1991, much, much higher than the 2008 recession. We got a lot of issues here, right? Let's see, still waiting for even 1 quarter of negative to confirm we're in a recession. Dude, all you got to do is walk outside, go to Walmart. You can tell me right now that we're in a recession. We can't afford not to have a severe recession either. That's kind of where my head is at too. When I say I don't know what it's going to take to fix this, I don't know, but I do think that we might need a severe recession to actually fix things. I do remember back in the 2008-2009 timeframe when we were going through the recession, everybody was lowering prices like crazy just to get our customers back. I remember, going to Applebee's or whatever and getting the 2 for $20 deal, right? 2 people could eat with drinks and an appetizer and dessert for $20. Dude, at this point, just the drinks, just for a drink, is $20. The Fed knows the U.S. is going into a recession. That's probably the only way to fight inflation, reducing interest rates at the same time. Why do you think delaying a correction is a good idea? It simply raises the fall even further. Listen, there is a ton that we got to figure out, and I don't know what the answer is. And I also have no idea how the YouTube algorithm works, but it tells me that you're going to love one of these 2 videos, so click here to watch more. Thank you so much for tuning in to today's Outlier Live. We'll see you on the next episode.